For more on Alphabet's results, let's bring in Deepwater's Gene Munster for his take. Gene, great to see you. What is your take on capex, how it has come down quarter on quarter and now is leveling off, and how do you sort of interpret that and sort of impute that into, are we going to see monetization happen?
Well, the CFO was just talking about they're going to invest with an efficiency mindset, invest in these growth areas. And so I think you're seeing that in the CapEx numbers. And so I think there is, well, my mind immediately jumps to NVIDIA here, not to get off topic, but ultimately I still believe NVIDIA's in a great spot despite kind of these topping off of some of Google's CapEx numbers. And so I think that this is, I think it's an example of how Google is growing from AI, at least the infrastructure, in a smart way, and of course, an impressive number. I want to just jump in because I think there's something that's I do want to cover here, Melissa, that is, I think, really important, is that this is probably not because of the CapEx number, but I think this is probably the most important Google report in maybe 7 to 10 years, something around there. And the reason is that 10 years ago, there was a lot of debate about how mobile was going to impact the business. And of course, that's been the narrative around Google for the last year, is how is AI going to impact the business? And what we saw in their US business, that is where the AI overviews saw the first full quarter. The expectations were that it was going to grow at 12%, it grew at 19%. And I think that this is the first evidence, and the call has just been a chorus of commentary about how AI overviews is having a positive impact on the business. Now, we're not out of the woods yet, Google investors, but I think that this is a most encouraging data point after a lot of hand-wringing over the last several quarters.
Hey, Gene, thanks for being on. This is a very small part, but I'm interested. Waymo gets, I guess, I don't know, no-ish credit. What do you think it should be?
Well, the reason why it doesn't get credit is that it's just such a small part of the business. We're doing some of the numbers on it today. They're doing about 30 million. They didn't report this, but you can back into it, about 30 million a year in revenue. So it's like a speck of revenue. And if it grows a lot, it's still going to be relatively small. And so I think this probably ends up better as a standalone company, and where Google investors may benefit 5 or 10% from Waymo, but just unfortunately, given the size and having really nice growth, but just given the size of it, it probably isn't going to have a big impact. I wish it was different, but I don't think it's going to have a major impact on the stock.
Hey, Gene, it's Dan. Nice call. I know this is kind of exactly what you laid out here, and that's what's playing out. And when you think about low expectations, and to Guy's point, the stock should probably work back towards the July highs. You look at the valuation. Quick one. Why is consensus for gross margins a huge step down from like 68% to 62%? And will that be somewhat, maybe conservative if you start to see capex slow down a little bit?
So gross margins, we'll hopefully get some commentary on the call, but gross margins are impacted by traffic acquisition. This has been just at the center of the whole regulatory conversation. They have not commented on it as of the first two questions. It hasn't come up yet, but I think that has an impact. Another piece to it is content costs related to YouTube. And so I think that we'll see how those two levers play out. I think that if it does see a dip based on that efficiency commentary, that of course is a magical word for investors from the CFO, I think that we should see some margin improvements down the road.
Gene, there are a lot of overhangs over Alphabet at all times, regulatory, but then there's also the legal overhang as to whether or not there needs to be some sort of payment to sites that it's Gen AI assistant points users to in order to answer queries. And I'm wondering how you start thinking about that, because if you think about, you get the answer, you don't click through to the site, that site sees a decline in ad revenues, that site then doesn't advertise as much either. So it's sort of this vicious cycle that can start.
So there's some similarities between what happened with when Google was just emerging 2005 to 2010, publishers taking issue that they're essentially scraping traffic from them. We're seeing the same thing now. And ultimately, Google did deals with these publishers. We've seen a handful of them on the AI front with Reddit and OpenAI doing deals, and they tend to be kind of in the $50 to $100 million a year right now. So if you're going to put it in a context about what could Google potentially spend on some of these license deals, could be in upwards of $1 billion a year. It's a big number, but I think that in the grand scheme of things, the squeaky wheel gets greased from these publishers, and I think $1 billion goes a long way to kind of make sure that everybody's playing fair.